latest news from financialmirror.tv. EU finance ministers have agreed to guarantee bank deposits up to €50,000, up from the present €20,000, with the ECOFIN meeting in Luxembourg acknowledging that the many are determined to raise the minimum to €100,000. Irish Finance Minister Brian Lenihan in the doghouse with some European partners after Dublin unilaterally took radical steps to stabilise Irish banks, said a figure of €100,000 was an option. European governments are struggling to shelter banks and depositors from the financial crisis that snowballed from the United States and is now rattling confidence, pummeling stocks and paralysing wholesale money markets in Europe. In a rare appearance after talks with Eurozone finance ministers, ECB President Jean-Claude Trichet said, "You can tell the citizens they can count on the ECB." Iceland sought an emergency bailout from Russia on Tuesday, and the Russians unveiled an aid package for their own banks. Australia cut its interest rates to 6%, putting pressure on Western central banks to cut the cost of borrowing, while shares in some of Britain's biggest high street banks tumbled on news of funding talks with the government. Iceland used emergency powers adopted on Monday to dismiss the board of directors at Landsbanki and put its second largest bank into receivership. It also propped up its battered currency and said it was sending a delegation to Russia to discuss a $5.5 billion loan to help it through a financial meltdown that threatens national bankruptcy. Russia announced an extra $36 billion of new credit for its own banks at an emergency Kremlin meeting after stocks suffered their worst pounding ever on Monday. Economists expect emergency rate cuts from the Bank of England and the European Central Bank in the next few days, with the US Federal Reserve under pressure to cut interest rates from 2 to 1%. Britain and its banks will hold more urgent talks over a possible multi-billion-pound injection of public money into the sector over coming days. News of talks between banks and the Chancellor of the Exchequer, Alistair Darling, sent shares in Royal Bank of Scotland, Lloyds TSB and Barclays plunging on Tuesday as investors feared their holdings might be diluted if the government were to buy a stake. Royal Bank of Scotland shares dropped more than 30% to a 13-year low amid rumours of recapitalisation, but RBS said it did not make a request for capital. Some reports said the banks were seeking £15 billion each to help them get through the crisis. Barclays and HBOS said they had not asked for capital from the government either. RBS raised a record £12 billion in fresh capital earlier this year. Barclays raised £4.5 billion in July from investors including Qatar and Japan's Sumitomo Mitsui, and only last month raised a further £701 million from a share sale. Oil rose by $3 a barrel to beyond $92 on Tuesday after a large interest rate cut in Australia raised hopes that other policymakers would follow suit to bolster economic growth and support oil demand. The gain recouped some of the losses on Monday when oil fell by $6 as part of an international market rout, and European equities also moved higher after. But oil traders were sceptical over whether the rally would last. Oil has plummeted from a record $147 a barrel in July as high fuel prices and the growing financial crisis slow oil demand in top consumer nations, such as the United States. Analysts are watching oil demand from China, which helped drive oil's rally from $20 in early 2002, for signs the crisis is hitting consumption in the world's second largest consumer. Middle East stock markets slumped to multi-year lows on Tuesday as speculation intensified that a 5-year Gulf property boom was over and that developers would be forced to merge as financing conditions deteriorated. Ambitious developers in Dubai and other Arab Emirates have unveiled $100 billion in new projects, but investors were focusing instead on Europe's spreading banking crisis and falling global markets. Shares in Saudi Arabia, the biggest Arab equity market, fell nearly 9% to their lowest level in a year, while Egypt's main index fell 16% to erase all gains since mid-2006. The Saudi central bank admitted that it faced problems supplying liquidity to banks while managing rampant inflation at the same time. Middle Eastern markets were briefly spared from the widening financial crisis due to the heavy influx of petrodollars, but faith in the financial system has weakened dramatically due to concerns about exposure to the property sector. And as if other troubles weren't enough, the UN Food Agency said the world needs to rethink its rush to biofuels, which has done more harm pushing up food prices than it has good by reducing greenhouse gases. The Food and Agriculture Organization said policies encouraging biofuel production and use in Europe and the United States were likely to maintain pressure on food prices but have little impact on weakening car users away from oil. Growing demand for biofuels will boost prices of agricultural commodities in the next 10 years, having already driven sugar prices up by 26%, corn prices up by 11% and vegetable oil prices by 6%. A one-day strike will halt all Greek flights on Wednesday as workers stage a 24-hour strike against the Conservative government's privatisation policy. The private sector umbrella union said that airport staff, dockers and transport workers would protest against a plan to sell off state carrier Olympic Air, which is losing around $1 million a day. Workers at partially privatised telecoms company OTE and the state-run Public Power Corporation will also walk off the job for a few hours in solidarity, as will postal and railway workers. Prime Minister Karamanlis, whose ruling New Democracy has fallen behind in the polls, pledged last week to push through reforms and privatisations despite fierce opposition from unions vowing more protests. That's it for now. Thank you for watching FinancialMirror.tv.